Good morning, everyone. I am Howard Lindsay. I'm joined today by my Trends with Friends partner, Michael Perek, in Houston today, Mike?
Houston, indeed.
I'm in San Diego, and we're welcome with an old friend of mine. He's beaming. He's freshly married, freshly groomed. And is she grooming you? You're freshly groomed.
I appreciate that. I showered today for once.
That's a very high pressure dryer. You're using a high tech as well. And Kyle Samani joining us from Utah, Austin, where?
Austin. I'm at home in Austin, Texas.
Nice.
And
I need to change into a t-shirt. I don't get the memo on the uniform.
You're going to get the memo. It's the anti-monkey suit.
He is looking good. Kyle and I go way back to 2017. I didn't know your roommate in college was Pranav, who I'm also an investor in his fund. So it's like, I've got the whole thing covered. There's very low odds that two guys at what school?
NYU. Yeah, Pranav is a very close friend of mine, and we were roommates junior year of college.
So Pranav's at Van Eck, good friend of mine. So just small world that I'm an LP in both of your funds. I had to, I tried every way to get out of being in Multicoin. So Michael, just so you know, the backstory here with Kyle, introduced by Vinny, I was a seller of, didn't really understand Bitcoin. I think Bitcoin was at 1,000 in 2017 or 17, on its way to 19,000.
That was the peak.
That was peak. And I was a seller, and Vinny goes, you got to back Multicoin. And I'm like, dude, I think I just sold all my crypto. So the only way I would invest in Kyle, because I think your fund at the time was what, 10 million, 6 million?
Yeah, something like that. 10's probably about right.
And I said, listen, if you can take IRA money, which was my way of saying, you'll never take my money, I'll make it happen. Thinking that, like, if it's IRA money, I'll do it. And I don't think you would do that today, in the position I don't, but at the time they were like scrambling to raise capital. So you got it all done through Pensco, and Gary, my partner, and I don't think we let Tom's pretty pissed, but I don't even think I wanted to tell Tom, because he would have just said, fuck off. But at the time, Kyle goes, yeah, I set it up for you at Pensco. So I had to, Kyle, I don't even know if you know this story. So we deposit, I don't know, 150,000 in your first fund, which turned out to be one of the best funds of all time. And I remember about 2 years into it, Kyle, this is a funny story. And we're out of time, so we're not even going to have any time to talk about what you want to talk about. But this story, I don't even know if you know this story.
Reminiscing on old times now.
Yeah, no, but I don't know if you know this story. So Gary is an animal. He's a risk on all the time. So he didn't sell any of his crypto and put money in his retirement account. Has crushed it with Multicoin. It's amazing. And very different risk profile than me, Gary. So about 2 years in, Kyle, we're getting your statements, and it's like 90K or whatever. And my wife, I was under a yearly full audit from my wife, and she's got her hat on, she's going through papers. She goes, what is this Multicoin? Can we sell? And I'm like, why are you worried about, a $60,000 loss in crypto? I'm like, and so I called off Ellen. She was kind of like closing things down and taking losses. I said, it doesn't help us to take a loss in our IRA. Just leave it alone. I think at that time, probably Solana was probably like 10 cents or something, right? And
it was 2019, it wasn't even live yet.
Yeah. Okay. So we don't sell. Long story short, millions and millions of dollars later. So my wife she almost crushed me on my IRA account. But you didn't. Do you remember those days and like what it was like in 19? I mean, we've had some bear markets, but do you remember as a small fund what it was like back then?
Oh, I do. I mean, we were struggling to stay alive. We had to raise GP capital. No one took us seriously. Like crypto, DeFi wasn't a thing yet. I mean, it was just kind of like if you were in crypto through that winter, if you were not a Bitcoin person, which I've never been a Bitcoiner, then you just were there to believe that like something would emerge of this, and it was quite unclear what it would be.
And Mike, during this time, you're doing semiconductor investments, so you don't care either way. So flash forward today.
I dabbled a little bit in this stuff.
Flash forward today, Multicoin started as a $6 to $10 million fund. I know David Sachs was a big investor. I think Fred Wilson, I introduced you to, is a big investor. Let's flash forward. How big is Multicoin?
Today we're an SEC registered investment advisor, so our filings are public. AUM is in the 3 billion range.
3 billion range. Now through this, you've also had a drawdown of like 90% post. So after the great run, what was harder, the first struggle like through 18, 19 bear market, or the 90% pullback in 22? Can you compare them? Is it? When did your hair? Do we have a picture of your hair in summer of 22?
Sure, we can find one. Let me go dig through my photos app here. They were very different. I mean, the first bear market for us was just kind of like one of irrelevance, and it was just like we believe, but like, what exactly do we believe in?
Mm-hmm.
And by the second one, we knew what we believed in. But we were everyone was very mad at us, and Sam, and just there was just a lot. It was anger. It wasn't
like
anger.
The real estate crash in 08. I was part of that anger 09 in Phoenix.
Yeah.
Where
And I mean, look, people felt some. Again, in 2018, 19, like we were just so small that we were irrelevant. And like even if you were in our fund, like your percentage allocation of your net worth to our fund was so small. It's just like it just didn't matter. Yeah. And that stopped being the case by the end of 21. And so, and then obviously, look, like FTX happened, and we had money on there, and we had a lot of investments we had done alongside FTX, and whatever, we got caught up in it. And so people felt wronged and hurt and angry. So the sentiment was very distinct. I think emotionally, 22, 23 was much harder than 18, 19.
Okay, so now here we are. It's 2025, October. They call it Uptober, but I don't know what that means. It's funny. I think all of crypto is both amazing, because some of the smartest people I know are in it, and some of the smartest people I know ignore it. So and then some of the smartest people I know doing the worst thing is just making fun of it. So it's like there's three categories of people. I think ignoring it's fine. I think being long and all in is fine. I think the people that just dismiss it it says something more about
rat poison squared, I believe is the technical term you're looking for.
Yeah.
From our good boomer friend Warren Buffett.
So here we are, October. Multicoin's 3 billion. We'll talk about Solana. You've taken over a public company. I don't know how we call it. It's like a reimagination of their business. It's different than a SPAC.
They're adding Forward Industries has added a new business strategy to the business.
Yeah. So and then the third thing I want to talk about is prediction markets, and maybe we'll talk a little bit about AI, so Michael can tie it all together. And so you pick which is first. You want to talk about Forward, Solana, Multicoin, or prediction markets?
I think we should probably start with Solana. I think that's the natural segue into Forward.
So let's talk about Solana, because you've done well by me, and I still don't know if I use it. And I know I will be using it because Stocktwits, and I chat about wallets and Stocktwits and fast twitch trading and prediction markets. So give me the layman's version, even though my audience, just a trends with friends. The Solana is hovering around $200. The most exciting it got was when Trump launched his coin, I guess, on Solana, which I think was on Solana through some other things, and Solana peaked at 260. So here we are with Solana. Explain to my type of audience who rides along with me as a trend follower, and it's obvious that Solana is not going away, where Solana is and what excites you about it.
Yeah. So I think to understand the vision of Solana, it's kind of encapsulated in this term that I and a number of others in the Solana community have been talking about for the last few months, which is what we now call internet capital markets. And actually, I gave a presentation at the All In Summit a few weeks ago, but I encourage you to watch that presentation. It's 10 minutes long. I gave it at the All In Summit a couple months ago.
We'll link to it. Yeah.
Thank you. And the core understanding of internet capital markets, I think there are two vectors to understand it. And I talk about one of those vectors in the All In presentation, and I don't really address the other one. But one of those vectors is just getting existing assets people trade, Apple, Google, Nvidia, whatever, FX, commodities, onto crypto rails. Because crypto rails are 24/7, they're global, they're permissionless, they're programmable, and it will make financial market infrastructure better, cheaper, faster, and it will increase access for people, like especially people in emerging markets who really don't have access to Robinhoods and the other kind of like modern brokerages that most Americans
They will,
expect.
right? Because of Alpaca, and you know, and you'll meet
They will, but I would actually, it is my base case that the vast majority of people over the next 10 years who own an equity for the first time will
do
own
it
it
on a token.
in crypto, a crypto tokenized version, as opposed to via Alpaca or some other hook
Yeah.
into the DTCC.
And Michael will talk to why maybe that won't happen, but keep going.
Yeah, so that's like one vector of understanding internet capital markets, and it's kind of the generic one. It's not like
good.
super
Like people need to
exciting.
understand it. That's a great one.
And then the other vector, and this is the one that I really talk about more in the all-in presentation, is in what crypto enables is it enables a finance to become an internet native primitive for the first time in the last 30-year history of the internet. And what I mean by that is, like, today, all of finance is actually very isolated on the internet, meaning if you want to trade a prediction market, you go to polymarket.com or go to kalshi.com and trade. If you want to buy an equity, you go to Robinhood or Morgan Stanley or Fidelity or whatever, and you click that, you go there, there's a search box at the top, you type in the ticker, and then there's a price chart, and there's a buy or sell button, right? And like every single brokerage firm in the last 30 years, like that is the UI flow. That holds true not only for equities and commodities and FX, it also holds true in crypto. Coinbase has the same user interface flow. Even Phantom and Soulflare and the crypto wallets all have the same basic flow.
Okay.
And I call that like kind of like isolated finance.
And I think we've hit peak isolated finance.
I agree.
Yes.
To be clear, that's never going away, but like, because people always want that. But
no,
we are now working, because these crypto APIs are permissionless, open source, 24/7, global, intrinsically. We are now seeing people embed finance into other places in the internet, and that's enabling trading and financial market applications to happen in new contexts. And so, let me give you a few examples. The first new what we call modality that emerged for trading beyond the kind of generic one that I just described was about 2 years ago, and it was actually these Telegram bots. And if for
I didn't get into it, but it was huge, and they have the cash tag over there, so it was huge.
Correct. So the core inside of these Telegram bots is, if you are in crypto today, I would argue the substantial majority of crypto discussion in the world happens on Telegram, in group chats, public forums, etc. Tens of hundreds of millions of people use Telegram for this purpose every single day. And the core insight was, hey, instead of going to your Phantom wallet to trade and then reading in Telegram, what if you could just trade in Telegram? And so these bots were made, and like they're very simple to use. You type in like /buy, and you'd say I had BTC, right? And it like buys BTC for you.
Sure.
There was never trading in human history that looked like that before, like until about 2 years ago.
Remember though, I wanted this to happen with Twitter, with the cash tag in 2007.
Yes,
if Twitter.
You had the vision for it.
I honestly, I'm not trying to toot my horn, but because you don't even know all the history, and Michael knows the history, and Fred Wilson knows the history. This is Robinhood. Only in America could Robinhood have happened in 2013. That should have happened in 2007, 2008, right? But what happened was people from Silicon Valley who didn't know finance, right, like Kumbaya, Arab Spring, Jack and Ev were like, no, this isn't about finance, right? Like, so we got pushed back 10 years. Mark Zuckerberg and everybody makes jokes about Twitter, but all they really missed was they were the protocol, right?
Correct.
Like Fred Wilson thought that was a protocol. Like, he got that fucking right. And Twitter, the filling holes part, and there's so much missed, like, because Twitter was the ultimate platform for all of finance. Like, with the capital markets will look different today if Twitter, because it was so open. Telegram was like, oh my God, the cash tag, like, Mark Andreessen trading on Twitter, you trading on Twitter, all those things should have led to a wallet, but keep going.
Anywho, so the first kind of new modality for trading was these Telegram bots.
Yeah.
That emerged about 2 years ago. We are now seeing a lot of people. We're now going to start to see trading embedded in other new contexts. And so in my all-in presentation, I provide a handful of examples. One very obvious one is, I expect in the pretty near future, like probably in the next few months, you are going to be able to trade prediction markets while you're reading the Wall Street Journal. or other equivalent financial media of some form. It's fairly intuitive if you're reading an article about Jerome Powell and interest rates. Shouldn't the thing at the top be an interactive price chart, not just a screenshot of a price chart? And obviously, then have a buy and a sell button. Like clearly,
No
that should
doubt.
be there.
Because it's a language. And
Correct.
I think what people don't understand is this is news.
Correct.
So while Congress was worried about Facebook and Twitter and DraftKings and whatever, you can't regulate something. Innovation came along.
Correct.
And instead of opinion, you get prices.
Correct.
And you can bet
So that's
against
gonna
the
happen.
price, or you can bet with the price. And as I tell my daughter, who's so mad all the time, I said, now you have a place to go, Polymarket. And if you think it's wrong, you can make a bet. You can go argue later and waste your time on Twitter and Instagram and try and convince people, which is a stupid thing to do because you're never going to convince people. Or you can learn the language and profit and make change. If you believe Mondami is going to win in New York and you go look at the numbers, the only way to affect change is to now go affect change. Go local. You're going to have to go fight. If those numbers are true, what are you arguing about on Twitter to convert people? Go affect change. So I think this is like one of the greatest innovations of prediction market is not the actual betting. It's the fact that it will get people off Twitter and off Instagram and say, listen, the front page of news and information is predictions. And we will move beyond this social era. Social will move to the secondary level, meaning look at the chart. Here's how the bet is expressed. You better get your act together if you really are worried about this, or if you think the numbers are wrong, you can bet against it. Go ahead, keep going.
Yeah, I mean, I think prediction markets are going to improve financial literacy dramatically.
We've needed this. Because
So you're going to start to see the ability to trade prediction markets on major media sites. On the same, by the way, will be true for sports. If you're reading about whatever, reading on Yahoo Sports, like there's going to be a buy and a sell button on the, whatever, who's going to win the Super Bowl or whatever it is. This is all going to happen, I think, over the next few months.
Well, Stocktwits partner with Polymarket again,
correct.
So Stocktwits will become a prediction site.
That's right. So I'm very excited about that. There's another example I highlighted in my all-in presentation. I've always thought it would be the idea of swipe to trade for a prediction market. I find to be like extremely compelling because most prediction markets are binary, and so the modality of swipe right or swipe left to make a prediction, with an embedded trade, $5, $10, whatever it is, I think is extremely compelling. And we have one portfolio company that's not yet announced that they are doing this focused on sports. And the interface is like the intended bet is, will the next play be a run or pass?
As an investor, but my problem with all these is the cold start problem. So it's a question: is this an API driven thing or is it a cold website thing?
Oh, I mean, this is a native app because you need that product experience has to be extremely polished for that to work, right? So there's all these kinds of new things, and then the other incredible opportunity for trading is obviously private group chats. The Telegram bots that I just alluded to a few minutes ago were actually very much single player experiences. But you can imagine, especially with sports betting, you have all these group chats with fantasy, right? Like group chats and stuff. Why can you not say, bet $100 on the Bucks? And then your friend says, no, I'm going to bet on the Bengals.
Yeah, peer to peer.
And they counter trade you. And like, there should be a button that says copy trade and another button that should say counter trade.
Yeah.
And it should be in the group chat.
I think, this I'm so excited to talk to you, and Mike will let, Mike's probably brewing with some stuff here, but what I hate the word copy trade. I think, I think that scares people. I think it's copy bet. I think there's two ways to go with this. You can copy the bet. You can bet peer to peer. I don't think what people don't understand about group, like, you had all or nothing. You had to be open on Twitter, or you had to be closed on Telegram, right? And that's because Twitter missed the idea, and Snapchat really had a chance to get young people involved by doing an API and getting people involved in investing. They had the right model with video. They had the news aggregate. They really missed, again, Evan, I never pitched Evan, but like they had the APIs to go do this and really convert young people. They would have been the ones to convert the young people, but Robinhood got all the marbles. And when we'll talk about the second derivative of Robinhood's comeback was, I just want to get it out there, is Robinhood almost got shut down for confetti 4 years later. 4 years later, the confetti gate. 4 years later, they can you imagine Vlad in a board meeting going, "Hey guys, I know confetti gate didn't go well, but we're just going to partner with this company called Kalshi, and we're going to let people bet on sports." Like, wait a minute, we almost just got shut down for confetti. It's kind of like you if you spelled tomato wrong, you couldn't be president 30 years ago, and now if you are a tomato, you can be president, right? Like, so we are now at the tomato part of prediction markets. So I think what really this comes down to on Solana and stable coins and all this, you'll explain to me, and meme coins and altcoins, is in that group chat, but you can go peer-to-peer, you can pool, right? You can challenge other peer-to-peer groups. This is the ultimate fighting. This is the ultimate bragging rights. And I think it cures spam because, hey, before I block you, you fucking mutant, why don't you put $5 on this and we'll have bragging rights. So you can finally turn an enemy into a compadre.
To a friend, yes.
Over a bet. And I think that could cure a lot of the spam. So these are all the things that I'm thinking about that are blowing my mind.
I think shit posting and trading are like yin and
yang. Thing.
Like they go so well hand in hand.
It's so the same. It's like our data can be used by somebody else. I hate you, but here's what we're going to do. Before I insult you, well, I'm going to keep insulting you, but let me insult you after I beat you in a bet, right? Or lose. And that becomes data, and that becomes people that you can bet against the moosh, right? Like this is all going to clean up a lot of the internet mess and create, very unique market data. Okay, Michael, I know you've got some strong opinions here. Just a lot to digest. Where are we off here? And what do you like about it? I was going to ask Michael. Michael, you're digesting here. What do you think of this crazy discussion so far?
No, I'm very intrigued by it. This is all very early days. As Kyle, you said, this is all kind of evolved very quickly, especially the prediction market side over the last couple of years. Offline, you and I were talking about this. This reminds me. I mean, I started at Goldman in '82, and I remember options and futures were just becoming understood, and internalized institutionally. And I was part of that. I used to sit 10 feet away from Fisher Black, who had joined Goldman as a partner back then in terms of the pricing models of these things. And we were just trying to get our heads around how these things worked from a trading mechanics point of view. I'm intrigued by your internet capital markets analogy because I was, again, 15 feet from our capital markets group on the trading desk. And so this is all very exciting. The one thing I would ask you technically, Kyle, because you're talking about Kalshi, there's all these separate siloed prediction markets, and how are institutions looking at all this across these markets? In other words, if I wanted to do a Mamdani trade or a JD Vance versus Newsom trade across these various prediction markets institutionally, in the old days, if I wanted to do options futures, there was a specific exchange I would go to, or New York Stock Exchange, NASDAQ, whatever. Here, from the beginning, these are discrete markets, all siloed. And I'm just trying to figure out how do the professionals kind of, or even, investors who are active kind of cope with the silification of these prediction markets, and then compare the same thing across the same technically.
Are you seeing
that
anything
infrastructure evolving? Does that make sense?
Yeah, I think I understand the question. I mean, look, discovery for these things. I think right now, Kalshi.com is obviously separate than, let's say, Drift, which is a perpetual exchange on Solana. I think in practice, what's amazing about these crypto systems is all of the backends are all open permissionless systems. And so you can hook up any back end to any front end. And what I expect you're going to see front ends that if there's a power user that wants to be trading prediction markets side by side with Bitcoin perps, let's say, and if that user profile really exists. Someone is going to build a front end that hooks into Drift on the back end for the perp trading and hooks into Kalshi on the back end for prediction markets. There's already if you're deep in crypto circles, there's a number of protocols, things like Axiom and Phantom and others, that they do this today, where they basically just have two tabs at the top. One is like a meme coin trading tab, one's a perp trading tab, as an example. And those two tabs hook into different backends. So this kind of design pattern already exists. I think it'll become more common. I also think that the other thing you're going to see happen contemporaneously is you're going to see margining systems built that margin across all of these things. Obviously, this is how the world works
Is this
today.
why
Any major hedge
Solana
fund-
becomes important because of the yield and lending, or no?
Well, so I mean, like today, right? JP Morgan and Goldman and Morgan and these guys use their balance sheets, and they make
Sure.
those available to hedge funds, and they can trade across CBOE and CME and NYSE and whatever, right? And in a similar way, that construct of a prime in that configuration does not really exist in crypto markets today. There's a bunch of people who've been trying over the years, and we've looked at a bunch of those teams. We are an investor in one protocol that's called Zero, actually, and it's built on natively on Solana.
It's going well.
And it is a prime. It is basically a mechanism to have a prime where anyone can lend into the prime.
That's amazing.
And then they allocate capital across all these different venues. They manage risk, and then hedge funds or other sophisticated traders, instead of going to each venue directly, they would obviously go through Zero. And Zero will provide, better rates, more collateral efficiency, because they can hedge everything correctly across different venues.
What's amazing here, and get me if I'm wrong, Mike, the 80s and 90s, which was your world, and you deserved all the riches you got, the world was different. The world wasn't developed. We didn't have networks. There was no liquidity, right? So to the victors go the spoils in the 80s and 90s. And I look at options and futures today. I still don't want to learn them. Like Tom Sosnoff, who's Thinkorswim, and now what the hell's the name of his new company that's crushing it? But basically for futures trades, dude, I'm 60 years old. I'm washed up. Those languages never made sense to me because they were institutional first. I think one of the most beautiful things about prediction markets, and obviously stablecoins before that and crypto before that, it was retail first.
Correct.
Right? We are moving to a retail first world. And I think and I'm jumping over, so I apologize because it's just an exciting combo for me because I never get to talk to Kyle and Mike, you guys at the same time. But like, we have moved, there's so many things about this that are interesting because the futures and options still never explain the language well enough, right? They still are an institutional product that retail has adopted because it's available and fun, and Robinhood made the UI right. But in an ultimate world, prediction markets are better than options. And they're actually a much better education tool, meaning my son, and I told this to Kyle, will never trade stocks. Okay, I'm at peace with that. But he needs to learn this language. And the idea of being able to pull out Tesla's going to beat earnings or Nvidia is going to beat earnings from the direction that happens from that is such a terrifying concept to beginning investors, because it just blows their mind that they got something right and lost money, combined with time value of money, versus, hey man, my smart friends and I, we believe that Optimus is going to have a great quarter. They're going to crush their numbers. They don't have to have an opinion about what happens to the stock at a certain amount of time. They just have to have an opinion on like how reading Elon Musk and all the news is. So I think that's exciting. That's a very retail first, language first combination that's going to be epic for the prediction market.
Yeah, I mean, it allows you to express true pure play perspectives.
Yeah.
On so many of these things. Is Tesla going to turn on
without leverage?
Without leverage, yeah. Is Tesla going to turn on nationwide FSD by this date X or Y? Like, it's so clear. And you're right. It's very frustrating to own TSLA, and like the Fed cuts interest, it raises rates, and like the price collapses, and you're like, what? Like, I'm sure they're rolling out FSD. It's very frustrating.
Yeah. So I don't know if it's going to increase volatility. I don't want to argue about what it's good for, what it's bad for. What it's good for is onboarding. We need the greatest game in the world is the markets. There's 4 or 5 people that have gotten things right in my lifetime. Michael, I'm lucky I get to talk to you every week, but Fred Wilson, Chris Dixon, a few people that have just been fundamentally correct more than wrong, around enough things financial that are important. The hardest thing has always been language. Robinhood, I wouldn't say Coinbase did, but I would say, Coinbase, God bless, but Robinhood really flipped the language, right? With all their hacks. But again, like, I think we're now at peak, whatever we called that before, right? Like, the next innovation will come from something you don't see. Why Robinhood is
The next 10x in retail trading comes from embedding trading in these
everything.
other contexts.
APIs, what Twitter could have done 15 years ago. And it comes from the fact that I've been saying, and Robinhood, to Vlad's credit, to what I got wrong, right? Because terminal escape velocity on me to that would be like a $50 billion, $60 billion company. What he got right, and why the stock's at $140 is Wall Street. Kalshi wasn't even I don't think Robinhood would have believed that Kalshi would have been that big a bet for them, a big a product for them. So they completely caught everybody by surprise. Now everybody's years behind Robinhood from Coinbase on. The reason Robinhood flipped Coinbase in market cap was because of Kalshi, right? Like, the analysts just didn't have it on their books. And that's how you become a $100 billion company. Uber wouldn't have been a $100 billion company without Uber Eats, right? Like, so we're in this, the hints are there, and Robinhood has a massive head start. But the good news about prediction markets, like you just said, they will become embedded. It's Robinhood's got the early advantage, but if it becomes embedded, companies like Stocktwits, Twitter, anybody can be big who has scale around group chats, etc. I think it's why Robinhood launched social, is not for copy trading, but for copy betting. I think when we could argue whether they're going to be good at social or bad at social. You and I have talked about this, Kyle. But the point is, either way, it's good, because it's they copy betting and peer-to-peer betting are going to be massive.
I mean, so talking and trading go hand in hand. Your intuition about your commentary about Twitter, and then obviously Stocktwits, is that people want to talk about what they're trading.
Yes.
Which is very natural. And what is all these Telegram chats? What is Twitter? I mean, it's people talking about capital markets.
And so where does Solana fit in this in stablecoin? Where do you see, like, what's other bets on Multicoin? Let's go back to Solana, like, where we know where does Solana fit into all this?
Yeah, I mean, we think Solana is by far the best positioned foundational infrastructure to power basically everything we've been describing. Spot trading of meme coins, of Tesla stock, of whatever, powering trading of perpetuals and options, and other derivative contracts, powering prediction markets. Kalshi hasn't announced anything, but like you can probably assume Kalshi is doing some crypto stuff. They've obviously been making some very public crypto hires in the last couple months. So you should expect to see Kalshi rolling out some stuff pretty soon on that front. And all of this, we think is going to be, the bulk of it's going to be powered on Solana. Solana today is by far the most widely used blockchain in the world. It has the highest trading volumes. It has the highest application revenue. It has the highest revenue flowing to solo stakers. It's if you look at all of the metrics of vitality and of organic usage, Solana is far and away number one on all those metrics. So, and we're very excited about that.
So, Michael, you're an internet analyst. So Solana right today is based at $100 billion. Let's walk through how it becomes a $500 billion company. What is it? A company? Is it an entity? Is it a?
It's not a company. I mean, it's an asset. It's a commodity. Okay. And actually, I wrote a blog post a few months ago on the Multicoin blog called "The Solana Thesis: Internet Capital Markets." And in that thesis, I walk through kind of how do you get, if you're buying Sol at 100 billion, call it 100 billion plus or minus, how do you get, like, what's the case for it to be $1 trillion? And like, I can tell you I'm holding Sol because I think it gets to $1 trillion. And so in that blog post, I kind of walk through the thesis of how we get there. It's not like a DCF. I think the growth rates on inputs are just, it's too noisy. But when I think about the total TAM availability and the ability of Solana to capture that value, I think you can get to $1 trillion.
And where do stablecoins fit in all this? Meaning, are they the highways between what people use, as JP Morgan uses this chain? Like, where does stablecoins fit into this? Fred Wilson was early bullish on stablecoins. I'm super bullish on stablecoins. Where does that?
Yeah, fit? I mean, stablecoins are obviously the primary asset people want in the world is US dollars. And that's not going to change anytime soon. And the vast majority of assets in the world are quoted in USD. And so the growth of stablecoins is a necessary prerequisite to also facilitate the growth of all of this trading that we've been talking about because whenever you're trading whatever the Fed interest rates on Kalshi, on Solana, or you're trading a sports bet, or you're doing this whatever, like all of those things are going to be settled in stablecoins on open global 24/7 permissionless systems like Solana.
Yeah,
And
just to be
go ahead, Mike.
clear, the reason I was talking about institution, the 80s and 90s is not for historical lessons. I was just pointing that was the nascent period of those types of securities, and it was the beginning of the institutionalization and the building of liquidity, which ties to your question, Howard, whether it's Solana as a utility, 100 billion going to trillions of dollars, stablecoin, which already is seeing trillions of dollars of institutional flows now with all the recent regulatory changes. And so, yes, it is very important to watch the meme coin trading retail aspects of this. But ultimately, the markets I'm looking at right now on Kalshi, etc., it's just math. It's just math. It's and liquidity and how much money institutionally. If I see a price on the Mamdani trade 100 to 106, I want to know what sizes are on both sides. And in the 80s and 90s, the Goldmans of the world provided huge amounts of liquidity. Today, the markets are much more robust on a lot of fronts, and that's what I'm curious about, because these things, they kind of, history rhymes. This echoes to me. This is the beginning of some of these, this plumbing and infrastructure being built, which is what Kyle's talking about. It's very exciting. And I'm just curious as to how fast all of this stuff is getting institutionalized in terms of capable, sophisticated institutions being able to do arbitrage. Where is when is the quant fund stuff happening here? When is the
I don't
renaissance?
think yet. What are you
It's
seeing?
all
What are you
already
seeing?
here.
It's here already.
Oh yeah, I mean Sig and Citadel and Jane Street and Jump, all of these guys, they're all active on Kalshi. I'm not less sure on Polymarket because it's not regulated, but they're all active on Kalshi. You have tons of prop trading firms today, market making across Kalshi and Polymarket and these other venues. That's only going to grow more robust over time. Obviously, on the sports side, I mean, there's already a number of very large sports market makers, especially in Europe. But all the major, Two Sigma and all these guys are all getting into sports market making on these open platforms like Kalshi because they can for the first time, because FanDuel and DraftKings were not open exchanges, right? They set the odds. And for anyone who understands the financial market,
They also kick off the winners, so it's not a true market.
It's not a true market, but like it's just absurd that one group just sets the price and says, take it or leave it. Markets should be markets, and so to have all of the most sophisticated and, for that matter, mom and pop shops and two guys in their garage being able to quote on a market is wonderful.
Yeah. No, we all agree there. I think the other thing that's different about this wave versus Web 2.0, we think about Wealthfront, we think about Betterment, the ones, that's what Silicon Valley thought was going to be the thing. They were like, assets under management is what venture capital should be backing, not trading, because trading was taboo, right? Because after 08, 09. So Robinhood came out with no interest, did the round at 8 million valuation. Think about what gets valued at 8 million valuation today. It wasn't because they mispriced it, it's because no one believed in trading. And that's as late as 2013, 14, 7 years after the App Store, 6 years after the App Store. So think about the mispricing that was happening. What's fascinating about Polymarket and Kalshi, you didn't have a split second to make that decision, right? Like the institutions were not going to be left behind this time, right? So the institutions never got behind Robinhood, other than Citadel, let's say. The institution never really got behind Coinbase. They never really got behind stablecoins, right? They went from rat poison to kind of believing to now with prediction markets, they're in the seed. Like, I mean, ICE just put in $2 billion into Polymarket. Wall Street and retail have never been more connected so fast. And this is, again, why Robinhood's the proxy for this, because of the Kalshi partnership, right? So Robinhood is telling you, screaming, that whether you believe Robinhood's overvalued, there is so much money on the table here, to the first mover, obviously, in Robinhood, but to the second, third, fourth, fifth, sixth movers. There's so much chess to be played. But what Wall Street has committed to here is not being left behind in this race. They missed Web 2. Goldman went down their own path with consumer products and gave up on all of it and shut everything down. And Apple even got the better of them with the credit card. So they're like, with ICE moving in and with like venture being in Kalshi, like, and who's the big Susquehanna behind Kalshi? Like,
Yep.
this is the real one. And I think, well, and so how do you think about that, Kyle? How do you stay ahead of this now?
I mean, crypto has always been a retail first thing. And this stems from the fact of like, you generate a private key using entropy. I mean, how does your phone generate a private key? It literally measures like how electrons are moving around inside the silicon in the processor. And that is the core source of entropy that you use to produce a private key. And then you can obviously store that private key in your silicon. That maps very directly to this idea of individual sovereignty, and obviously that to Bitcoin and like all of those kind of core ideas. That concept does not map to a foundation or an endowment or a pension fund or any of these other abstracted financial constructs that we have today. And so it took a long time to get custody and multi-party computation and all these other things to get there. And so crypto has always been retail first, and that's always spoken to me certainly at a very personal level. Because in crypto, the history of crypto is guy launches new product, and like you go play with new product, and if you play with new product first, you can probably make money. And so it encourages exploration, and like the people in crypto, they call themselves trenchers, and like it's kind of a joke, but like they're the people who new product launches and they go put their money in it in a matter of minutes, and they're taking on incredible amounts of risk, and they can be rewarded for that. I love that kind of like pioneering mentality that comes with that. What you see happening now on the institutional side, yeah, look, the Black Rocks and the Franklin Templetons and those guys and the banks are slowly making their way into crypto. But actually, the groups that are really in crypto in size, that you would call traditional institutions, are the trading firms. And at this point, all of them are more or less in crypto. Not necessarily market making on DeFi, but certainly all of them are trading at this point on Coinbase, at least. And every single one of them has like a crypto plan and a strategy. And they're all executing against Jane Street, SIG. Jump is by far the most public about what they do, and they are by far the deepest into it. Citadel, all these guys, because what they understand is crypto enables anyone in the world to trade anything, and the big market making firms want to obviously provide liquidity. That's their mandate. So it's very natural that you see those guys being at the kind of forefront of it. And what's awesome is that those guys showing up does not preclude the two guys in a garage from doing the same thing. There are a ton of, I mean, there are probably thousands of individual groups that are 2 to 6 guys or gals and who are prop trading, market making, whatever. Some relative value, some are stat arb stuff, some just straight up providing bids and asks on the order book across all of these various venues. And the world is 8 billion people in the world. The world's a big heterogeneous place. And it's pretty incredible that 2 guys in their garage in India can compete with Jump and Jane Street. Now, they're never going to beat Jump and Jane Street, but they can at least provide liquidity on the same book on a level playing field. And that was not possible before. And that's just awesome to see.
And Mike, as an early internet capital guy, what do you? I'm just think this is so much more interesting than kids building apps and begging people to use it versus people at least creating liquidity in a system. Whether you like it or not, liquidity is what matters. So where's your head on this, Mike?
No, these are separate things. Like software is one thing over there, and all the technologies and AI, and so this is another thing, which is we're talking about marketplaces. And look, these things we're talking about are the pork bellies of 100 years ago. It's just a commodity that it's just that commodities are going from scarce to abundant. There were for the 150, 200 years, there were a dozen, 200, 2 dozen, a few dozen commodities that everyone traded, and everything became tradable in those, and it's very sophisticated, etc. Here, it's infinite, as Kyle's talking about. You can create markets and everything, which is why it totally makes a lot of sense that the smartest people on the trading side, the Jane Streets, the ICEs of the world, are totally all in on this stuff. And now with some of the regulatory uncertainties being clarified a little bit, it's a bit of an open market and a bit of a Wild West. So, it is eyes wide open kind of a thing for everybody in this realm. But exciting.
And yeah. So all right. So we've covered some prediction markets. We've covered Solana. I want to talk about AI. We're going to go long because this is really fun to have. Let's talk about forward industries in this next step you did. Like you and I used to talk about SPACs. I did a SPAC, and when you were about to do a SPAC, I said, don't do it. Right. Like I don't feel
And
good
I
about it.
listened for once, and
I think you
were
listen.
right.
I
Thank you
mean,
very much.
it's a trader's a trader. You made the right move, thank goodness. But here we are in 2025, and now you're chairman of Forward Industries. How is it different than a SPAC? Just explain to people. I own FORD, but let's just talk about how you came off the bench for something like this versus a SPAC.
Yeah. So Forward Industries is a publicly traded company. I'm the chairman of it as of a few weeks ago. It's NASDAQ listed. The ticker is Forward, FORD. And the way I came to be chairman is we being the sponsor group, meaning Multicoin, Jump, and Galaxy, which are really three of the largest and kind of most well-known firms in crypto, came together and sponsored a $1.65 billion PIPE that invested into Forward Industries. The transaction itself was actually very simple. The company over the weekend being like September 10th or 9th, something like that. That weekend, the company issued 80 million new shares, something like that, at a price of $18.50 plus or minus. At the time, going into the weekend, the stock, I think the closing trade was like $16 or $16.50 or something. So we came in at a premium to the stock price for 1.65 billion. And by Monday morning, like that was it. Obviously the CEO and the board had authorized, basically adding this new line of business of being a Solana treasury company. And so Mike Pruitt, the CEO, and the board said, "Hey, we think there's an interesting opportunity here to make this big crypto play, and we want to do so with the right partners." And those partners being, Multicoin, Jump, and Galaxy. I'm now chairman of Forward Industries, and we've kind of already started our execution on what we said we were going to do. We bought a bunch of Solana tokens. Forward Industries owns 6.8 million Solana tokens, and that number is increasing every single day. And
so
then
is there a trade desk like last week when Trump announced the tariffs? Were you in there buying under 200, or is that stuff all being built as we speak? Is that stuff?
Forward Industries is not trying to play hedge fund on the Sol USD price. We don't think that's in our mandate. What we are doing now that we've kind of done our core accumulation is we're now putting together a strategy to deploy our Sol and dollars on chain into DeFi, and to earn incremental yield that way. So I've talked about this on a number of other podcasts, and I can't say a lot yet, but I pretty soon we'll be able to talk about kind of everything that we're doing on that front. But we believe we're going to be able to earn pretty substantial yields for our shareholders, both with the Sol side of our balance sheet as well as the dollar side.
Mike, any thoughts on that? How they've structured it?
No, it sounds you've thought through all of this, and again, nascent, early, and in size.
Yeah,
it's been a wild ride and journey. This is really my first time kind of interacting with Wall Street traditionally, and obviously I'm very crypto native, and so I think my vantage point is particularly funny given kind of how everything I understand about crypto, and then I'm going and interacting with the system that is this path dependent evolution over the last 100 years. Crypto is what you get with finance, with zero regulations, reinvented from the ground up, and it had plenty of its own problems. Obviously, those are very well publicized. And then the flip side is TradFi systems, which have this kind of evolved cruft over the last 100 years of financial regulation. And I'd say for most people who interact with both systems and really appreciate the strengths and weaknesses of both systems, almost 100% of them will tell you they prefer crypto.
Okay, two more things. So we're going way over, but I don't care. AI. Like I know you're into AI. Michael's into AI. Where does this all connect?
I mean,
Where
AI
is
is
connecting. Is it interesting to you, and how are you thinking about it?
Yeah, look, AI is objectively the most important technology in the world, and I'm a AI utopiast, meaning kind of the opposite of an AI doomer. And I generally think that there's going to be massive scale job displacement because of the utopia of AI. And I think one of the only things in the world that will not be disrupted by AI is the fundamental premise of capital markets. And so like being along the barbell of AI and crypto is I think actually like kind of the only thing I'm interested in my portfolio. And that's how my portfolio. It's mostly crypto, not so much AI, but Yeah,
It's funny.
these two technologies are actually extremely complementary.
I believe in barbell. Very early seed, doesn't need to be $1 billion company. That's social leverages, and very, very large cap liquid tech. So I'm barbell that way, just but crypto's now becoming more native to me because of stable coins, because it just makes so much sense to me as just financial products. Crypto, not so much. I don't know the lingo, but like the idea of stable coins and the idea of prediction markets and the idea of peer-to-peer is just so, I wish I was younger, as I tell you all the time, because, Robinhood was 2013, right? And by 2018, every single VC had switched to becoming a fintech VC. And I was just like, oh my God, this can't be good. Right now they're all gone because they chased, right? But the world doesn't need another Robinhood at this point, because Robinhood's not a bad product. It's just like you almost don't need another Tesla. Tesla's a fantastic product. Like, forgetting financials for a minute, like the product's great. People love it. So this misallocation of resources that happened in Web 2 is going to be so much less misallocation of capital in this new world. So I'm excited about that, because AI will make the smart people smart and keep the dumb people dumb. It's just going to be way more efficient. And I love seeing investments that blow my mind versus another app or, another delivery service. Like Web 2 really was a misdirection, I think, by the mistakes of the founders and the venture capitalists giving too much capital to the early winners. And I think this new generation, especially in hard tech, like with defense and hardware, is so much more exciting that VCs are allocating to that stuff, and that the Wall Street has embraced retail. So you have these two phenomenons going on. You have venture capital doing venture capital things. They sound stupid, but at least they're fucking interesting. And then you have Wall Street saying, wait a minute, retail could be 50% of the market. We better not screw this up this time. And like, even you at Ford, you have to be on Stocktwits. You have to be thinking about PR and how to tell a narrative in your first day. You can't just be worried about fundamentals anymore. You have to tell a story, right?
Yes.
And so so that's going to be different for you.
People want to review an Excel model. They want to understand what are the future of what they're investing in.
Yeah. So I think we're very early in that. So AI. So how do you think about AI and prediction markets and everything else in crypto?
I mean, I don't think there's a ton of crossover between AI and prediction markets, other than like, look, people will use AIs to trade prediction markets. I mean, this is a very common thing people do now, is they just look up a Polymarket or a Kalshi market, and then they just go kind of like ask the question to Grok or ChatGPT, and like, are you think it's priced too high or too low? There's already people who just do that and like make money,
But that's cool. That's using language. That's great.
Other variations of the same basic idea to start trading and making money. Obviously, you can imagine automating that and getting a lot more intelligent about how you do that.
Mike, we haven't been on
agree more on the, that intersection is an important one, because that fundamentally AI is about a 70-year shift in software from deterministic software to probabilistic software. And what we've been talking about all morning so far is probabilistic activity on trading, going from scarce commodities to infinite commodities in prediction markets. So there's a peanut butter and jelly mix of AI technologies and prediction markets. And as Kyle said, we're just at the beginning of how the stuff gets melded together, and we're going to see some pretty crazy radical things that are very interesting. Not too far from here. So
very quick iteration. Where are we on leverage? Like, I don't understand what the fascination here, Kyle. Everybody has exactly all the toys they want. So why the fascination with perps and all this stuff, and Coinbase offering 20 to 50 time leverage? Is that an area that interests you in terms of like, what's the value add?
I mean,
I don't get it. I just don't get it.
Earlier, we were talking about like one of the key unlocks of prediction markets is they allow you to kind of express pure play views on like, easy to understand questions. Like, will Tesla roll out their Cybertruck by whatever date? And perps kind of take that same idea and apply them to just liquid assets. Options, quite frankly, as an instrument suck. They're very hard to understand. Obviously, understanding the Greeks from first principles is very difficult.
Hate them.
And I believe the only reason zero-day options are popular today is because perps don't exist. And I believe that perps are going to become a thing in U.S. markets, equity markets, in the fairly near future.
Can you
And as
explain
that
it in English to an idiot like me? A perp, when you hear that word.
a perp, I mean, just imagine it's you're just levering up and just going long the asset with whether it's 50% or 100% or 300% or 800%, but you're just getting, you know, levered exposure, and it's like, well, okay, if the price goes up 1%, then I make 8%.
Okay.
Price goes down 1%, I lose 8%, and that's like very intuitive, right? To understand.
And that's how so many wallets got wiped out on hype this weekend.
Yeah, people. I mean, look, obviously trading with leverage, like recourse leverage, like there's always a chance that's going to happen. The kind of backward things about U.S. securities markets today is the reason options are basically permitted and perps are not is there's no recourse, right, on options. It's like, yes, you pay the premium and you know that money's gone, and that's it. And so like max loss is easier to understand in options than it is in perps. And so because of that, we just like designed the entirety of US securities markets around understanding max loss. What we didn't forecast is, well, turns out options as an instrument actually give you way more implied leverage, which just creates more, like leads to more degeneracy anyways. And so being able to go long something 130% or 180% is like, for a lot of people, that's actually what they want, but they can't get it without just like these short dated options. And the short dated options are not giving you 130% or 80%. They're giving you implied leverage of fucking 4,000%.
Yeah.
And so like we created this weird situation where you have like max leverage and kind of spot nothing, and there's all this room for gray in the middle. And I would actually argue that most of the people who want some leverage want that gray in the middle. It requires a little bit of thinking about, you know, what is my max loss and collateral management. But like, again, this notion that like, oh, if I go 2x levered and if I go down 50%, that means I get wiped out. Like, that's intuitive. Like, this is not complicated, you know?
It's really up to the house to manage that so they don't blow up.
Correct. And look, like, you should extend leverage in different ways. And there's obviously tons of sophistication that goes into those collateral engines. But like the idea of if I lever up 2x and I go to 50% and I get wiped out, I don't know. It seems pretty straightforward.
Yeah, good point. So now it's 2025. You're almost 40. I think you're almost 40, right? So, you know, forgetting about do-overs, like what you know, from starting to having 90% drawdown to being back on top, you know, near, you know, whatever all-time highs. How do you think about the world now in a risk scenario? Like, what would you do? Like, how are you prepared? Or are you just prepared for, hey, I live in a high-risk world and 90% drawdowns happen? Or like, what can you do differently?
Yeah, I mean, look, we think more about cross correlation, and I mean, the big thing we missed in 22 as asset managers was we did not certainly not anticipate a large scale fraud and implosion, and that fraud and implosion would not just in and of itself hurt us, but then would have correlated effects that were particularly pointed at our portfolio, given our portfolio construction at the time. So we you know, did not anticipate that. Fortunately survived. We obviously now think a lot more about what are those correlated failures look like.
Awesome.
That's our biggest learning lesson. I'm a believer the world is getting to be a better place. I think AI is part of that. I think crypto is part of that. And like, don't think too hard. Be long the things that you believe are like growing in the world. So I generally try and be as long as I can be, you know, to that effect, both personally and via the fund. Pretty straightforward.
All right. Well, this has been great. Mike, anything that you wanted to ask before we head out?
No, this has been very helpful to understand the scale, how fast it's moving, getting institutionalized. So
it's just unbelievable how slow Web 2 was to institutionalize trading of stocks, right? And how fast this is moving. I'm staggering. So how are people pitching you now? Like, what is the thing that you're looking for right now? What would excite you if you got pitched?
Yeah, I wrote a blog post a couple months ago. It's on the Multicoin blog. It's called New Modalities for Issuance and Trading. And it kind of covers this core concept that we talked about earlier about like these new modalities and new ways to trade. I am particularly drawn to new product experiences that facilitate trading in new contexts. I think that is incredibly exciting. And one of my particular.
All right, we'll link to those. Gents, that was a fascinating conversation. Kyle, thanks.